Welcome back, investors, to Ticker Time News. I'm Adam, and Amazon is making a prime move following its Q4 report. After missing EPS pretty badly in Q3, Q4 was a nice bounce back for the quarter for Amazon. The areas that jump out are the AWS and advertising services segments, both of which posted big results. The company also announced a price increase for its Prime memberships. Now, at first glance, the report doesn't look like it would justify such a huge move in the stock's price. Revenue was basically in line, and we did not get adjusted EPS results, so we don't really know how clean these numbers are. And the GAAP results factored in a huge non-cash benefit due to Amazon's investment into EV maker Rivian. Now, we can probably infer it was a beat because operating income came in ahead of prior guidance, but we just can't be sure. Amazon also guided Q1 revenues below estimates. Okay, before we get too far into this, could you smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more? That would be totally awesome, my friends. Okay, so why did the stock trade so much higher after earnings? Well, a big number from its AWS segment looks like the main reason. Its 39.5% growth was a modest acceleration from the 39% growth in Q3, 37% growth in Q2, 32% in Q1, and 28% in Q4 2020. Also, remember, Microsoft saw Azure revenue growth dip to 46% when it reported last week, which was a decent decline from growth of around 50% in the past few quarters. Maybe AWS is finally taking some market share. Either way, its results were impressive. Now, as I said at the beginning, we don't have a clean adjusted EPS number from Amazon, but the Q4 operating income number of 3.46 billion was above the high end of prior guidance, and it was above estimates of $2.57 billion. That's a decent proxy for profitability, and we can probably infer an upside EPS result. Also, Amazon guided a quarter-over-quarter increase in Q1 operating income at the midpoint around $3 to $6 billion. However, that was below estimates of $6.35 billion. Amazon also stressed last quarter that inflation, especially higher wages and higher pricing from third-party carriers, would take a bite out of Q4. Prior guidance for inflation was that it would have a $4 billion impact in Q4. And Amazon said on the call that its actual impact came in above that. Amazon expects these cost challenges to persist into Q1, although adjusted for lower seasonal volumes related to Q4. I think investors are happy that the inflation impact was not even worse. I also think investors love the Prime subscription price increase, as it signals that management is confident in its business. The increase is decently substantial, and they know their subscribers will pay it. This was Prime's first price hike since 2018, so I do not expect much pushback from consumers. Now, for the first time, Amazon has started breaking out advertising services revenue. It rose 32% year over year to $9.72 billion, a robust result that lets investors breathe a little easier after Meta Platforms sold off in connection with slowing ad growth, which Meta Platforms attributed to Apple's new privacy rules. The other aspect to this is that at nearly $10 billion, that's a larger business than I and many investors thought it was. Well, that's what I think of Amazon's earnings report. But I want to hear from you. What do you think about Amazon's $10 billion advertising business? And remember, your comments make these videos so much better. Smash the like button, share this video, and click the first link in the description for our top 10 stocks list and so much more. Thank you so very much for watching, and I will see you in the next video.